If you hold Ripple's XRP, Bitcoin, Solana, Cardano, SUI, Dogecoin, or any other cryptocurrency on Coinbase, it is time to get your cryptocurrencies off of Coinbase. Now, you guys have probably seen this within the past 48 hours, but there was a recent hack on Coinbase where they got names, addresses, phone numbers, emails, government ID images, and certain account data like balance snapshots, transaction histories. And the goal of this video is not to scare you guys, because actually I do hold some cryptocurrencies on Coinbase. But over the next few minutes, I want to prepare you for why holding everything on Coinbase is not a smart move. This video was just released from Brian Armstrong, where hackers demanded 20 million in Bitcoin from Coinbase, threatening to leak customer data, and he refused to give them their ransom, where cyber criminals bribed and recruited rogue overseas support agents to pull personal data on less than 1% of Coinbase's users, and they said no passwords, no private keys, or funds were exposed, and they'll be reimbursing impacted customers if you guys go check out their Twitter account at Coinbase for this post right here. And this was right after Coinbase announced new institutional assets, a part of Coinbase's CB asset program designed to offer secure tokenized exposure to major crypto assets, backed one-to-one and audited for transparency. So it's a little bit ironic that they released this and now they're having to deal with this hack, because in order to onboard as many retail customers as possible, they need to feel secure and that their funds are safe. And when they hear about hacks and customer data being leaked, that's the exact opposite of what onboards retail. Listen to this.
Big news for you guys on the S&P 500. Is that going to change your outlook at all, or the impact that Coinbase has?
Well, we're very happy to be included in the S&P 500. It now means that crypto is here to stay. It's going to be a part of everybody's 401k. It's a testament to the hard work of our employees and our investors. And it's a big appreciation to our customers, too, that helped us get to be one of the most trusted companies in America. And so we couldn't be happier.
And now here was the update that he posted.
Hey, everyone. I want to make you aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. Now, we like to do things transparently here at Coinbase, and so I'm going to respond publicly to these attackers by saying no. We are not going to pay your ransom. In fact, I have a few next steps in mind that I'm going to share at the end of this video. But for the rest of you watching, wondering what happened, we did an investigation here, and these attackers have been approaching our overseas customer support agents, looking for a weak link, someone who would accept a bribe in exchange for sharing some customer information with them. Now, our support tools have limited access to customer information. There was no passwords or private keys or funds accessed as part of this. But customer support agents do have access to personal information like name, date of birth, address, etc. And attackers still want access to this information because it allows them to conduct social engineering attacks where they can call our customers, impersonating Coinbase customer support, and try to trick them into sending their funds to the attacker. Now, unfortunately, they were able to find a few bad apples. Our systems are designed to mitigate the impact of something like this, so less than 1% of our monthly transacting users had their records accessed, but this is still unacceptable, and I want to tell you what we're doing about it. So first, any customers that were socially engineered as a result of this incident, we're going to reimburse them. There's more details on our website, on our blog post about the reimbursement process. You can read more there. Any customers who have been impacted by this or have been notified at this point. Number two, we're hardening our systems around customer support to make something like this much more difficult in the future. And third, we're actually relocating some of our customer support operations as a result of this. But the last step is maybe the most important, which is that instead of paying this $20 million ransom, we're turning it around. And we're putting out a $20 million award for any information leading to the arrest and conviction of these attackers. For these would-be extortionists or anyone seeking to harm Coinbase customers, know that we will prosecute you and bring you to justice. And now you have my answer.
So over the next few minutes, I'm going to share with you guys the smartest plan rather than keeping your funds on Coinbase. Also, what we're going to dive into is what's happening with wealthy clients from around the world shifting from the US dollar to crypto. We're going to get into the Bitcoin to the US dollar price chart, the XRP price chart. We're also going to talk about Solana, Cardano's price chart, SUI's price chart, and Dogecoin's price chart and the expectations moving forward over the next few months. Plus how you can get access to our research team's top altcoin picks that have explosive potential. So you guys are going to absolutely love this video. Comment 777 if you're feeling blessed. If you're feeling bullish, let's run it. All right, bull runners, welcome back to the channel. So to kick this video off, if you guys haven't entered into the XRP giveaway, do that. Just go follow us on Twitter. Super simple. You like the post that's pinned to our profile at bullrunnershq. Comment XRP on the post and then sign up for Blowfin using our affiliate link. You can get a 10% deposit bonus up to 50K. And then winners will be announced in our daily email newsletter on Sunday night. And that link will also be in the description below. You just click the link. It'll take you to this page. Click the button, put in your best email address so you can subscribe to the email list. And also, you'll get our new book for free called Altcoin Secrets, the underground guidebook to become a crypto millionaire. Guys, what is taught in this book has made a lot of people a lot of money. And don't just take my word for it. Go read it and then take action on the other side so you can join Altcoin Pro University and get access to our research team and get all of your questions about crypto answered 24/7. Plus top altcoin picks, airdrop picks, DeFi yield picks, and 100 plus classes teaching you guys everything that you need to know about crypto. Because with the recent Coinbase hack, this is one of the biggest problems we see in crypto is not only centralized exchanges getting targeted by scammers to get customer information, but it's everyday holders like yourself that get punished for it. You know, I was even hacked a while ago for $100 and something thousand simply for connecting my wallet to a fake airdrop checker, and they drained my entire wallet. And so yeah, that sucks. That made me want to punch through my computer, but that was a while back, and had I known what I know now, my funds would have been completely safe. This is one of the biggest things to know. Coinbase is a custodial exchange, meaning they manage your private keys for you. And so with non-custodial wallets, you have full control over your keys and security of your crypto. And a lot of people don't know the difference between the two. And the main difference is down to who controls your private keys. That's like controlling the password to your bank account. And with non-custodial wallets, it's basically like being your own bank, so the bank can't leak your password to hackers that demand ransom. So while exchanges like Coinbase or crypto.com, they're very convenient. It's somewhat easy to connect your bank account and load funds and deposit and just buy crypto on those exchanges. It also compromises your security. And you guys saw what happened with FTX going down. So there's a few solutions to protect yourself if you guys plan on day trading the markets or long-term holding. And a lot of crypto holders choose to use both custodial and non-custodial wallets for different purposes and situations. Because with a custodial wallet like Coinbase, you place trust in a third party to manage your private keys and keep your crypto safe on your behalf. And for those of you that don't know, a private key is a critical piece of information needed to prove who owns the wallet and most importantly, the funds inside. So whoever holds the private key controls the wallet. And if you guys receive comments, like if you comment 777 on this video and someone responds back to it, pretending to be us, their main goal is to get access to your private keys or to get you to send crypto to them. So do not do it. There's a lot of scams out there because crypto is still the wild, wild west until regulation comes in. But the obvious drawback of relying on third-party exchanges like Coinbase to custody your assets is that it undermines the most fundamental idea that cryptocurrencies were founded on, and that's decentralization and becoming your own bank. So if the exchanges are hacked, there's security breaches, or the companies go insolvent, they can keep your crypto. So it's super important that you weigh in what's the most important to you. Is it convenience or security? And this is what we talk about inside of our ironclad crypto security strategy in Altcoin Pro University. So when you guys click the link below, you go into the classroom here at the top, just scroll down to where it says Ironclad Crypto Security, click it, and then run through all of these videos right here because we talk about how to get your VPN, how to get your MetaMask wallet, Brave browser, and then different wallets like Trezor, Kepler, Rabby wallet, Phantom, MetaMask, etc., and seed phrase best practices to keep your crypto safe. So in my opinion, the smartest move, if you guys want to use both a custodial and non-custodial wallet, is if you plan on holding long-term, you do not want to hold long-term on a Coinbase or a crypto.com or a Kraken. You would hold long-term in a non-custodial wallet where you control your private keys, like a Ledger or a Trezor. And then if you plan on trading these projects in the short term, then you can use an exchange like Coinbase or crypto.com, or you just simply pick your favorite. We like Blowfin because they have futures trading. They also have copy trading to be able to copy other successful traders. They also have demo trading as well too, to be able to get your foot in the door without risking your own money so you can get more comfortable on the charts. And when you guys click the link in the description of this video, you can get a 10% deposit bonus up to 50K to be able to trade with. And then when you guys start generating results through your trading account, you could then, if you want to, take a percentage and put it into cold storage long term. and only keeping a percentage of your assets for day trading. Now, that's not financial advice because these videos are just purely for educational, informational purposes only, but that's what the smart crypto investors do, so they never keep all of their eggs in one basket or on one exchange, because anything can happen. Even over the past 200 years, the largest companies over 200 years ago aren't around today because they went insolvent. So as massive as Coinbase is, or as Crypto.com is, over the next 50 years or 100 years, the likelihood of them staying around forever is very slim to none, because new exchanges are going to pop up and they're going to dominate the market share. I mean, look what happened with MySpace and Facebook. There's always new companies that come in, that innovate faster, that do things better, and take over the industry. And so we'll just see what companies those are over the next few decades. But right now, here's what's happening, and the reason why it's very important to pay attention to the crypto market, because UBS, the $1 trillion banking giant, is revealing why wealthy clients are shifting from the US dollar over to crypto.
Alternative is not just private market, and also hedge fund, commodity, and crypto. Interestingly, recently when I talked to some of the traditional family offices, they were telling me they are now looking at allocation of 5% in crypto. That's the reason why even traditional banks like us, I have to make sure we get our platform ready to take on this opportunity. So I think definitely opportunity.
So this bull run is far from over, and the opportunity right in front of us is actually through altcoins. And so in order for altcoins to do well, we're going to need to see Bitcoin do well and break out to an all-time high, because that'll be the green light for institutions to just start dumping money into the markets. And the smartest investors are going to be rotating to the large cap first, then mid caps, then micro caps. So if we look at the Bitcoin to the US dollar price chart on the right-hand side of the screen, we're at about $104,000. Now, looking back to the bull run of 2017, we've seen this play out similarly to how it's played out in the past, where Bitcoin experiences a sell-off of anywhere between 20-40%. Everyone freaks out. For example, this sell-off back here, from June of 2017 until July of 2017 was about 38%, whereas the sell-off from January of 2025 until April was about 30%. So this isn't even that bad of a correction compared to the past, but yet more people were freaking out because altcoins got absolutely destroyed. So when Bitcoin pulls back, altcoins pull back even harder and drop like 50% up to 90%. Some of them going away completely because they have low liquidity and the founders just dip. So that's why at this stage in the cycle, it's smart to hold the majority into large cap projects that are just going to be around forever, and having a very small percentage of your portfolio, like less than 10%, in the small caps or the mid caps, because until roughly the last 1 to 3 months of the bull run, the large caps perform the best. And then we see a scramble at the end of the market where liquidity rotates into mid caps to micro caps for the last little gains at the end of the game, so to speak. So when Bitcoin finally broke off of this low of about $1,800 and broke this descending resistance, we saw a surge in liquidity very, very quick on this massive green candle on the 20th of July, where Bitcoin went from $2,200 to $2,900 in 1 day, coming pretty much back up to the all-time high of June. And as you can see on the right-hand side of the screen, we're seeing something similar happen right now, although it's taking a little bit longer to play out because this was over the course of 30 days in this sell-off back in 2017, whereas this sell-off was about 80 days, a little over 2 months. But nonetheless, we broke this descending resistance, and Bitcoin is marching back up to the all-time high. So I talked about this in previous videos where there could be some volatility in the short term near the all-time high for Bitcoin. And if we see Bitcoin get rejected from its all-time high, if it makes an effort back up to it, I would expect Bitcoin to range between the all-time high and roughly the mid $90,000 range, potentially even coming back down to $90,000. It's very well possible, as that was support all the way back here since November of 2024. We would want to see Bitcoin hold $90,000. Now, Bitcoin could come down to $90,000 and still be completely fine, although a lot of people would freak out because, we've gone from 73,000 to 104. So if we experience a flash crash down to $90,000, that would be the best buying opportunity of a lifetime, because I think that would get bought up very quick and we would work our way through this range before breaching into a new all-time high for Bitcoin upwards of $110,000, $120,000. Because if we look at key indicators like the MACD, the Relative Strength Index, and the Stochastic RSI, we see positive momentum on the MACD back above the zero line, similar to what we saw happen back here after July 19th of 2017 when a bullish cross took place. We saw positive momentum back above the zero line. while Bitcoin's price was breaking out, even though there was a little bit of volatility. Once the MACD crossed the zero line, we're seeing some volatility now that the MACD has crossed the zero line, but it's not as drastic as it was back here between the 20th of July of 2017 and the 5th of August. So the volatility might not be as drastic as it was in the past. It might be just simply what we're going through right now, where Bitcoin breaks out really quick and then holds a very tight range within a few $1,000s rather than experiencing these big pullbacks. And so if we just continuously see Bitcoin march up, hold a tight range, march up, hold a tight range, then eventually there comes a bigger, 10, 20, 30% correction. So that could happen above the all-time high. It could happen right at the all-time high. Eventually there would be a steeper pullback for Bitcoin. But when that breakout takes place, just get ready because you guys don't have a lot of time to prepare and you don't want to get caught FOMO buying in on the major breakout, because at that stage, that's how you get wrecked. For example, back here on the 17th of August, people that were buying up here, then Bitcoin pulled back 19, 20%. People panic sold this right here. The markets break out all the way to nearly $5,000. Then they'd buy back in up here at nearly 5K. And then Bitcoin experienced a 40% pullback back down to the previous high and then simply repeated the same thing again. We see this descending resistance. Mass liquidations are down here where everyone thinks it's over. It gets bought up really quick, breaks the descending resistance, experiences volatility right here, and then just does the same thing again. Breaks out. Everyone FOMOs in on the breakout. We see a 10, 20% pullback, pushes even higher, drops another 29%. So if Bitcoin just makes a run for it, breaches, $120,000, if we see Bitcoin push to 120, 130, then we could see some very steep pullbacks right there. So just be very careful buying that breakout. What I always look for is key indicators to be in oversold conditions. For example, the relative strength index being on, below, or close to 30. For example, back here when the relative strength index was at 27, this is when Bitcoin was at $1,800 all the way down here. On the right-hand side of the screen, when the relative strength index was at 24, Bitcoin's price was right here at about $77,000. And sure, it dropped a little bit lower than that, and that's what I talked about with that bullish divergence, where the price chart made a lower low, yet the RSI made a higher low, which was a major reversal signal because then the price broke off of that. Nonetheless, if you watch the relative strength index on the daily and we are below 30, even if you bought that dip, you're buying pretty much close to the bottom. Because if you accumulate $79,000, well, we're at $104,000 right now. Same thing right here on this major pullback by the 15th of September. You guys can see Bitcoin drop back down to 2,900 to back test the previous high. The relative strength index dropped all the way to about 27, 28 right here. So another great entry point. So at some point, what I would expect to happen for Bitcoin is on this major breakout for Bitcoin upwards of 120, 130, 140, 150. We just don't know how high Bitcoin will go before it experiences, a major pullback, potentially back down to the previous high. That could happen. I'm going to be watching the relative strength index to play out and drop down closer to 30 or even below 30 for another great entry point, because that's when people would think that the bull market is over, but then we could experience another push to another high for Bitcoin, because my price target for Bitcoin this bull run cycle is about $190,000. Because look at that cycle right here. What happened when Bitcoin broke out and experienced those pullbacks? We saw it happen time and time again. The breakout, major pullback, the final breakout, and then inevitably the bear market pullback right here. And it just took some time for Bitcoin to finally bottom out. So had you have bought in that consolidation phase right here and you didn't sell the top for Bitcoin, well, even at this stage right here during this consolidation, you were still up anywhere between like 120 to 250%. So in the macro, if you just have a long-term look on these markets, guys, even accumulating right now is not bad. If you can have the patience to sit and just wait and hold your position for like 6 to 7 months to the end of this year. This is what I've been saying this entire bull run. And while nobody knows what's going to happen in the short term, the long term is very easy to see. I've been screaming from the top of my lungs ever since Bitcoin was at the bear market bottom that we're just going to continue to march up in this bull trend because we're just continuously forming higher lows and higher highs since the bear market low. Now, looking at the XRP to the US dollar price chart, until Bitcoin breaks its all-time high, XRP is just going to range between the resistance, which is $3.40, and the support, which is $1.60. It's similar to what happened back here, like I've shown you guys in other videos, from May of 2017 until the end of the year, December of 2017. And I know that might be frustrating for a lot of you guys because you just want XRP to go up. But remember, the longer that something consolidates for, it just goes sideways or even down, the better entry points that you get and the more time that you have to accumulate. You got to start thinking of things that way, because every single person that's an investor in crypto wish they could have gone back prior to November 2024 and accumulated XRP around the 50-cent region or even below 50 cents. I mean, if you could have gone back to June of 2022 and got XRP at 28 cents, you'd be up over 700%. So that's like turning $10,000 into over $73,000. So where XRP is at right now, can you guys imagine over the next few years where it's going to be at? The challenge is really simple, and that's just patience and figuring out a way to make more money on the front end so that way you can put more money in to just sit there and hold. And also learning how to trade the markets. But that's also why we created our Technical Analysis Essentials course as well too, that you guys can check out through the link in the description below. But just simply looking at XRP's price chart right here, going back to 2017, we see the Elliott A, B, C corrective wave, then the consolidation between the B wave and the C wave before the next fifth impulse wave and the final wave of the bull market cycle. And that's just what we're going through right now. We just simply went through an A, B, C corrective wave, and now we're just going to be consolidating between the B wave and the C wave. And so the B wave is at roughly $3, the C wave is all the way down here at $1.60. And so we're right in the middle of the range right now where anything could happen for XRP. And if you look at the key indicators here, like the stochastic RSI, the relative strength index, the MACD, it'll give you a better understanding to get the best entry point. Because for example, if we just put up vertical lines right here on the chart for when we were all the way down here as close to zero as possible in the past, or I'll even put just rectangles here because you can buy within ranges. You're not going to buy the exact bottom every single time, obviously, but if you get relatively close to the low each time that we see a pullback during a consolidation range for any crypto asset, then you can get better entry points. So as you can see on the chart, I put a rectangle where XRP was on the price chart compared to where it was on the stochastic RSI when it dropped below 30. And these are relatively good entry points. You're not buying the peaks. You're also not buying the exact bottom every single time, but you're getting relatively close. And so this is why you want to watch the stochastic RSI on the daily and just look at where we're at. For example, we're at 75 right now. For the D line, the K line's at 56. So we experienced a bearish cross above 80, which is actually a reversal signal. So that tells me that XRP could actually come down a little bit further. And like I said, XRP was very close to a breakout. We saw that breakout happen from $2.08 to $2.60. You know, whether we pushed up to $3 or not doesn't matter. What matters is what's happening on these indicators and just watching these indicators for confluence on the price chart as well too. Because anytime that we're all the way up here, I do not enter in to buy anything because we're in overbought conditions. And that is proven time and time again to be a very good strategy. So what I'm going to be watching for XRP is for the price to pull back down, similar to what happened all the way back here from the 23rd of August until like the 23rd of September for XRP, when we broke out from this low of about 15 cents all the way up to 30 cents, got rejected from this resistance all the way up here where the B wave got rejected from, and then just coiled up within this range. And so, well, the B wave is already at $3. Sure, XRP, if XRP makes one final push up to that, we would just see this be a fake out bearish cross. And for the stochastic RSI to go back above 80, it's very well possible. But then if we see that happen and XRP reverses to the upside with Bitcoin, just get ready for that macro consolidation phase and something like this to take place for XRP throughout the course of this summer. Now, if that doesn't happen and XRP just starts breaking out to a new all-time high, then that consolidation phase would happen above the all-time high, and we would still watch the stochastic RSI for the best entry points below 30. So regardless of whatever happens on the price chart, we look for these entry points because, for example, I pointed this out in a previous video down here when the stochastic RSI on the right-hand side of the screen was all the way at like 5 and 6 for the K line, the D line. We experienced a bullish cross and we saw a reversal to the upside. Sure enough, that's right when the price chart was at $2.08. A great entry point because we broke upwards of $2.65. Even all the way back here on the C wave, look at where the stochastic RSI was. It was all the way down here below zero. Even all the way right here at $1.98. We were all the way down here close to zero. Even on this A corrective wave right here, we were down here close to zero. So if we dip below 20 on the stochastic RSI, it doesn't necessarily mean that's the best entry point. It's just a better entry point than buying above 80. Because you can do this for yourself. Go to TradingView, create your account, and just circle when we are all the way up here as close to 100 as possible on the stochastic RSI, and then look at the price chart and circle where we are on the price chart each time. You will see it's virtually right before a major pullback almost every single time. So to put it simply for you guys, above 80 and as close to 100 as possible on the daily stochastic RSI be very, very careful because that's usually when we see a pullback. And below 20, the closer that we are to 0, be ready because that's usually when we see a reversal back to the upside. So very, very simple. We could do this for every single chart. For example, looking at Solana's price chart, we rebounded off of the low of $95, and now we are at this resistance range right here that Solana held support from the 19th of December until roughly the 16th of February when it broke below it. It was also resistance all the way back here in July, May of 2024, and March of 2024. So this is a strong zone that Solana needs to clear. And currently, we experienced a bearish cross above 80 on the stochastic RSI, and now the K line and the D line are at 59 and 39 in a downtrend right now. And so I don't like to enter into a trade when we're in the middle of a range on these key indicators, and also we're at a level of resistance, because it's very easy to see reversals back to the upside and for us to go back above 80. And it's also a 50-50 coin flip if we just come back down to these key levels of support. For example, right here at like $142 to back test this region right here. So there's just too much uncertainty for Solana right now on this current price chart for me to say like I would enter in here or I would sell here, because I'm watching the stochastic RSI. I would want to see it come back down here below 20. That's what I would want to see. So it's just very simple because we're at a resistance range right here. Technically, we could push a little bit higher and still be within the resistance range and then see Solana come back down a little bit further, or we could just come down right now. So the risk to reward ratio for Solana in the short term to push up a little bit higher is not worth it in my mind. I mean, we come all the way up here, it's like 20%. Even back to the all-time high, it's only 70%. So for that reason, I am not buying Solana right now. Now you can let me know in the comments below if you think I'm wrong. Well, good. You know, if Solana breaks out, awesome. There's other altcoins that I think have a bigger risk to return ratio. And a lot of people have asked us to look at Cardano's chart right here. And if I were to just analyze this really quick, we're still in a downtrend because we're putting in lower highs. We're at a descending resistance right now in this bearish channel right here, where you guys can see lower highs getting put in ever since the 3rd of December. And we just simply got rejected from this descending resistance again. Also, on the stochastic RSI, we experienced a bearish cross above 80. We're in a downtrend right now. We're right in the middle of a range. So if Cardano experiences a push to the upside, I would expect this to be some type of fake out and for us to consolidate and do something like this, just simply putting in a higher low from the 7th of April before we rebound on out of here to make a new high. This is what I would expect for Cardano. And eventually the stochastic RSI to bottom out below 20, to then experience a bullish cross close to 0 and a reversal back to the upside. This is what I would expect for Cardano. Now, I could be wrong. It's not going to look exactly like this, but this is just how we see these charts play out until we see trend reversals. For example, right here from the 14th of March, we just kept putting in lower highs for Cardano and lower lows for Cardano until eventually we found the low. And then massive amounts of liquidity got injected in really quick. So this could take a while to play out. You know, it could play out something like this. We find a bottom and then bam, massive amounts of liquidity come in. We just don't know when that liquidity is going to come into the market. It happens really quick, and it's actually significantly less than most people think. For example, I explained this in another video for why market cap doesn't matter. It's all about volume in a 24-hour period, because in order to move the market cap of, let's say, like XRP or even Solana or Cardano, to do a 2x, it's not going to be $141 billion to do a 2x. It's actually significantly less, because when volume comes in relatively quickly, it affects every single holder's positions because they're now worth more, which then affects the market cap. So like if $50 million came in, well, then that's billions of dollars in market cap and growth because of all the other holders' positions being worth more. So this is why we see these massive spikes in the price chart. And everyone's like, wait, what just happened? Like billions of dollars came in? No. Hundreds of millions of dollars came in, and it moved the market cap by billions of dollars, which then moved the price, you know, right here from like 32 cents all the way upwards of $1.30. So at some point, I would expect there to be a liquidity injection after Cardano is finished consolidating in this downtrend, similar to what happened right here, similar to what happened all through here, where you just look at the indicators, you spot when we're as close to 0 as possible, you line it up on the price chart as well too, and you can see that will present you with some of the best entry points. Whereas if you're just coming in the market and you're emotionally buying when everyone else is buying, you're getting hyped out of your mind, and you don't look at these key indicators, well, I'll just show you real quick. I'll circle the 3 top points right here. When the stochastic RSI is all the way up near 100, and you can see on the price chart why that is a bad move, because you'd be buying right here at 10 cents, you'd be buying right here at 11 cents, you'd be buying right here upwards of 18 cents, rather than accumulating 7 cents, 8 cents, 13 cents on these pullbacks. So scrolling over to where we're at right now, it's very simple. We just experienced a bearish cross right here. Sure enough, Cardano got rejected from like 85 cents. It's pulling back right now. The K line, the D line are right in the middle. Even if we experienced a reversal back to the upside and Cardano pushes even higher, just watch the stochastic RSI, guys, because eventually it will come back down below 20. It has every single time since it was launched. There is not a single time. It's 100% success rate. This is the easiest way to trade. You can get complicated and you could use like all the other stuff if you guys want. And that's what's taught inside of the technical analysis essentials to just make you a better trader. But I'm trying to make it as simple as possible for everybody to understand here. If you guys want to take your game to the next level, then join Altcoin Pro University. You can understand EMAs, SMAs, Bollinger Bands, Fibonacci tools, all of that stuff in the 4 horsemen of technical analysis. But for the purpose of this video, we're just going to look at the stochastic RSI right now until this video is over. So right now with it in the middle of the range, I'm not buying Cardano. Now, if we look at SUI's price chart, we can see that the K line and the D line are at 25 and 7. We haven't quite bottomed out yet. So I think there is still some more volatility to play out. Potential liquidity flush is back down here to like $3.10, $3.30, somewhere within this range. That's definitely possible. So I wouldn't be buying SUI right now either. And you guys are going to see that if a couple altcoins are showing the same things, it's going to be across the board. And because the liquidity moves these projects generally together, even though some of them move first to the upside or to the downside, they all kind of move together in the same direction with Bitcoin breaking out. So if Bitcoin doesn't break out, if Bitcoin continues to range sideways and is volatile, then altcoins are going to be even more volatile. And the risk to the downside for SUI is like 18% back down to this low right here, whereas a pushback to the all-time high is at like 40%. And I talked about this breakout for SUI. I said, watch this descending resistance right here. Eventually is going to be broken and we're going to see a massive liquidity injection for SUI and then some volatility here before we break out into a new all-time high. And that's what we're going through right now, just the volatility. And so I'm just going to be watching SUI very closely. I'm going to be watching the stochastic RSI. And even when it dips down below 20, I don't want to just buy right away. I want to wait for confirmation. After we've been down below 20 for a period of time, we experienced a bullish cross, similar to what happened back here at the beginning of September when SUI was at 73 cents. We broke this descending resistance. We experienced a breakout. Then we saw some volatility right here. And if you bought that breakout, you would have just been buying into a bearish cross above 80 right here when SUI was at $1.11, pulling back to 74 cents, dropping about 30%. Getting a terrible entry point when you could have watched the stochastic RSI on the daily, accumulated this right here, and then experienced massive price appreciation to the upside. Even on this major pullback right here, we can see a massive bearish divergence where SUI we just kept putting in higher highs all through this phase right here. But yet on the 22nd and 23rd of September, we experienced a bearish cross near 100, but yet the price chart was only at $1.78 and it continued to march higher. So the stochastic RSI was putting in lower highs, but yet the price chart was putting in higher highs. That was a signal of a bearish divergence and a major correction was coming. And that's what we saw, this correction right here, where SUI dropped from $2.37 to about $1.60, dropping 30%. Then if you look at the stochastic RSI, when it was down at $1.60, even down here at $1.64, where was the stochastic RSI? It was as close to zero as possible. So that's what we're watching for right here. We're watching for something like this to take place. Right now, we can see the start of a bearish divergence for SUI, where the price chart is just putting in higher highs, whereas the stochastic RSI is putting in lower highs right here. So if SUI continues to march higher and we don't experience that pullback and it just does something like this to get to the all-time high or past the all-time high, we're going to be watching the stochastic RSI. If we see a reversal here and it get rejected and it coming down below 20 while the price is breaking out, then you watch for that major pullback like this and the stochastic RSI to bottom at close to as zero as possible for the best entry point before SUI breaks out and just sees a massive liquidity injection and explosion into price discovery and doesn't seem to slow down. And then bam, that's when we see the stochastic RSI break out back above 20 for both the K line, the D line, and an insane reversal similar to what happened right here after this bearish divergence played out and this pullback took place. With a little bit of patience here, you guys could have accumulated that and seen a massive appreciation of about 220% over the course of 70 days. And so we will revisit this video and we will see how this chart plays out. Of course, it's not going to look exactly like this, but we're going to be watching for a bearish divergence, which is happening right now. We've seen the first lower high on the stochastic RSI, where we've seen a higher high in the price chart. So I actually do think, in my opinion, just looking at this chart and kind of analyzing it on the go with you guys, I think we're going to be forming some type of bearish divergence, rising wedge potentially with higher highs, higher lows on the price chart, but lower highs on the indicator, which tells me that momentum would be slowly slowing down for bullish for a major liquidation event for long traders that are going to be longing the market up here while the stochastic RSI is bottoming out. Then we see a 20 or 30% pullback really quick in the markets. SUI finds a low and then boom, breaks out from there. Now looking at Dogecoin's chart, this is actually looking pretty good. I mean, we just broke out from this downtrend since, the 8th of December. We were making lower highs. And if we were just draw this trend line right here, again, it's not 100% accurate because sometimes when you have descending resistances, we see these fake outs. For example, like the price puts in a lower high, but it still breaks a descending resistance and then a lower low, lower high, lower low, lower high, finds a low, breaks the descending resistance, consolidates for a little bit, then experiences a massive liquidity injection, consolidates for a little bit, similar to what happened through this phase right here for Dogecoin. So we're just going through that right now. Now, depending on how long this consolidation lasts for Dogecoin through this range before we experience the next liquidity injection, we shall see. But I think Dogecoin is actually going to do very, very well the rest of this bull run because it's the largest meme coin by market cap. And when Dogecoin starts to break out, then we're going to see other meme coins breaking out as well too. Because Dogecoin is just in a macro market uptrend. You can see we bounced off of this ascending support right here. We're just putting in a higher low. And eventually I would expect the breadth to open up for Dogecoin for us to experience massive liquidity injections back to the previous all-time high right here in May of 2021 of about 74 cents. So I do think Dogecoin is going back to that level at some point, potentially even to $1. And then we experience a blow off top for Dogecoin before heading into the next bear market. So right now at 22 cents, Dogecoin's not actually that bad, but we want to watch the key indicators as well too. We don't just FOMO in here because we need to have patience and also calculated moves here to get the best entry point. So what did we see for Dogecoin? Well, it's pretty much the same thing as these other charts. We experienced a bearish cross above 80. Sure enough, Dogecoin peaked out about 25 cents. It's experienced a short-term pullback right now. The K line, the D line are right here in the middle of the range. So I wouldn't be entering in right now, even if we push a little bit higher for Dogecoin. I do just think we're going to consolidate here for a little bit longer before we see these massive liquidity injections come in. And so I want to see the stochastic RSI reset all the way down here below 20 while the price is putting in a higher low than what it was putting in right here on the 7th of April. So very simple. I'll be revisiting these charts for you guys over the next few weeks and the next few months, and we'll just see how this plays out. And then we're going to watch a few other key indicators as well too that I'll bring up in other videos. Because one of the main charts that really signals what's happening with the whole industry, other than total 2 and total 3, is the others chart. This is everything other than the top 10. And so we're experiencing the same thing. We just saw a bearish cross right here above 80 when the price, or the market cap peaked out at about $300 billion. Now we're at $265 billion on the short-term pullback. The K line, the D line are right here in the middle of the range. And so if we see a reversal back to the upside, Dogecoin, SUI, Cardano, XRP, etc., would experience a push up higher. Potentially XRP gets to $3 if there's a reversal, but I'm just going to watch for a reset down below 20 and just keep an eye on this chart right here for a better entry point than where we're at right now. And even if it doesn't dip this low, that's how we maximize our average cost basis while minimizing our downside, just buying in because we think it's going to go up from here. We never guess, we always verify. For example, look at what happened right here on the others chart from March of 2024 until the 3rd of November. So we were in this downtrend experiencing lower highs until right here on the 27th of September. We broke above this descending resistance. Look at what happened on the stochastic RSI if I zoom in for you guys. We experienced a bullish cross right here below 20. Sure enough, that was the best entry point right here at about $170 billion. The stochastic RSI saw a bullish reversal to the upside. The market cap broke this descending resistance. We experienced a bearish cross all the way up here. And then we saw a massive pullback really quick, back down to $197 billion. The stochastic RSI drops all the way down here below 20, which would have actually been a pretty good entry point, even though, we saw another low right here that was a little bit lower. It's relatively speaking a pretty good entry point right there. Just watching the stochastic RSI, because the stochastic RSI bounced back to the upside and then a final reset back down here a little bit below 5 before the next bullish cross. And then once that bullish cross took place, we saw this massive reversal to the upside. Same thing for the stochastic RSI. Massive reversal to the upside. So let's just trace out this bars pattern right here and let's see what this could potentially look like. So if I compress it a little bit, it could look something like this, where this recent breakout right here was the first sign of a major trend reversal, similar to what happened right here on the 27th of September for this breakout above this descending resistance, but we still had to come back down and back test it while the stochastic RSI reset. So because we just experienced this major breakout right here and we experienced a bearish cross, I would just expect some major volatility over the next few weeks for us to form some type of bull flag above this descending resistance and then to find a low during this consolidation phase right here while the stochastic RSI experiences a bullish cross below 20. Now this takes time to play out, guys. This might be like a month or two. We don't know. But this is what I would expect here. And then whammy, massive liquidity injection for quarter 3, quarter 4 of this year, and a massive breakout in altcoins. And then we see the alt season that we want. And then we see Bitcoin's dominance drop. So in the meantime, this might seem like bad news, but this is actually good news because this gives you more time to accumulate your favorite altcoins. And if you want to get a competitive edge to know which altcoins are going to see the most amount of liquidity flow in when that breakout takes place, then that's exactly what our research team will be sharing with you. For example, our research team posted GOAT on the 13th of October of 2024 when it was right at a penny, and since then it rallied to over $1, 5,000%. That's like turning $1,000 into over $50,000. Our team called Pendle at only a $16 million market cap, or 16 cents, back on February 18th of 2023, all the way back here, and since then it's rallied up over 4,000%. That's a 40x. It's like turning $1,000 into over $40,000. Our team also called BitTensor Tau September 15th, 2022, before the token was ever even launched. And since then, Tau has rallied over 2,000%. That's a 20x. Our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. The list goes on and on and on. Our team called SUI, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, this is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses, just go through the link in the description below. Get in right now. Watch the 26-minute video covering everything that Altcoin Pro University offers to help you become the first millionaire in your family tree, if that's a goal of yours. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside.